All right, guys. Good morning, ladies and gentlemen. Welcome to week number 4 inside of the 30-day bootcamp. Boys, time to get fucking serious, right? So, if you guys saw yesterday's recording, type 1. If not, type 2. Perfect. I'm glad. Wow, so everybody likes watching Sunday Swings, but you don't like watching the bootcamp recordings. Okay. Okay. So, um, I mean, all I can say is everything from this point forward is gonna kind of be like Sunday swings, just a bit more detailed, a bit more advanced. I just want to do like a market update. I want to show you guys how I update the charts every single time I come and watch it before I actually start executing trades and before I actually start explaining. So I had to rewatch Sunday Swings like 3 times because you were doing it so fast. Sorry, not sorry. You got to get used to it. It's not supposed to be fast, but it's supposed to be simple. And when things are simple, you can kind of speed through them. And I want to bring you guys up to speed how things are going. I watched it with half speed, even simple. It was fast. Perfect. All right, cool. So I'm going to show you guys basically what I do now that we have Sunday Swing. So remember, we have all of the markets that we were interested in watching right here. So remember, what I do is throughout the week, I will only execute on markets that are here. I don't give a shit if GBP USD, if TTTPDD, if if any other currency pair has whatever pattern, I don't care. I stick to my principles and I stick to my word, and it's only focusing on these markets right here. I had a logical mindset and I had a clear mindset when I analyzed these markets and I made the predictions for them. Now that the week has started and let's say I missed all of these trades or there's no opportunities in all these trades, I cannot go and look for more opportunities in different markets. That's it. If the trades are gone or there's no trade opportunities, the week is done. Even if the pair right under this one, NZD CAD, right under Euro USD, gives us the perfect entry signal, we will not take it. Now, you could go ahead and do that if you would like to, but just keep in mind that you're doing something wrong. You're breaking the trading plan, you're breaking the trading principles, you're breaking the trading rules. And you can do that, but you better hold yourself accountable. And if you don't, then you're just starting off with the wrong foundation and you're just cheating yourself already from the start. So just want to again like everything that I teach you here is so you are fully aware of absolutely everything that you are doing when you're doing the right thing, that you're aware of it, and when you're doing the wrong thing, that you're fully aware of it. Now whatever outcome happens and how you want to go about it, that is for you to have a mature and a longevity approach to it. Because if you start creating a principle and you start creating a foundation of not giving a shit from now, but you just won't last as long as I have, or as long as other successful students, simply because you don't have the right foundation. Not saying you won't make money. There's a very big difference in between making money and being successful, like constantly. Like I can go now and invest into this meme coin, altcoin, whatever the fuck this is, and I'll make money. But just because I made money on this one crypto doesn't mean that I'm now a successful crypto trader or I'm a profitable crypto trader. That just means I made money. I got the right coin, I bought at the right time, and it went up, and then I just sold. Now, it doesn't mean that I could just do that with any coin because I don't know what the fuck this is. I don't know the background behind this. I don't know. I don't know anything. I literally have no idea anything about this. I just got this recommended by a friend. And the same thing would happen with here. If you just see me analyze a trade and even though it's a wrong trade, you still take it and you make money. That doesn't mean you're a successful trader now. That just means that you just made money in trading. The only way I would actually be qualified as a successful trader is if I know the full reason on why I'm entering this market, on why it's a great meme coin or whatever, and it's connected to this blockchain or whatever. Like I know exactly what I'm doing, and I know that it's a great opportunity or it's a degenerate. So when I make money in it, I know when to do it again or how to exactly do it again and spot it again. Or when I lose money, I know exactly why. If you don't know exactly why every single time you're doing something, you're fucked. You're not going to have a long term thing. I'm just speaking facts, right? Cool. So, what I do every single time as soon as we come back into the market is start off basically the top down. Should be quick. Weekly. Cool. Looks like it's rejecting. Amazing. Daily. Looks like it's rejecting. Amazing. Looks like it, right? Because we still have 9 hours and 46 minutes. We can totally reverse. 4 hour. Looks like it's rejecting. Amazing. So last I remember, we were waiting for a shift of structure and our entry confirmation on this. Cool. So the 4 hour is officially bullish right now. And I would count this as the higher low. I would argue maybe that as it is two candlesticks. Nah, yeah, this would be the 4 hour higher low. But we don't need the 4 hour to be bearish. We need the 1 hour shift to structure. This would be the 1 hour shift to structure right here. And then no, that's the 30-minute. Even the 15-minute shift to structure. I would not count that as the higher low. So the closest shift to structure would literally be this one right here. So technically up to this point right now, we are yet to shift the structure on any time frame. The 1 hour, the 30-minute, or the 15-minute. So we're just waiting for the shift of structure. Now on this trade in particular, specifically because we are so far from, we're so close to the take profit. Like we're basically already like 50% of the move where we want to be to our take profit. When this has a shift of structure, for this trade in specific, I would wait for the pullback. So let's say it does shift structure now, right? And it does close under. Cool. The daily will have a nice daily doji wick. Then the next day, we should have a full retracement to like retest that. And then that's where we enter and then sell. I'll explain a little bit more into that in a second. But basically, when we create right now, let's say a lower low, right? When we go bearish, I think it's going to have a beautiful lower high. And then that's where we can have our entry right there. Because we can have our entry somewhere around here. And then our stop loss would be just right above this right here. So we're going to have like a 40 pip stop loss. And then we get a very nice 1 to 2. So this one in particular, once we have the shift of structure, if we ever have the shift of structure, I'm going to wait for a retracement because the risk to reward needs it. Even if I don't have a shift of structure and if this would be the risk to reward, cool, but the stop loss won't be placed correctly. I need to make sure that my stop loss is always above that structure high. And at this point, this risk to reward won't make sense. And I could do something like this, but I rather wait for a better retracement. And then there I could have a much greater risk to reward. So there's some trades where I would enter at the shift of structure, but that would be more like right if we were at the area of interest or right inside of it, because I could, be a little bit more aggressive with my stop loss if I wanted to. And there we should have a greater risk to reward setup. So when a trade is kind of far like this from the area of interest, especially if we're having the shift all the way down here, I want to make sure I can get a retracement as close I can to it. Now, again, you don't have to. You could take this trade at the shift of structure here when the 1 hour and the 30-minute shifts. You just have to get a bigger take profit and you have to wait for the whole thing to play out. It's just a little bit more time you have to let the trade go out. Now, I don't know how much time that'll take. I don't know when. I don't know how fast. I have no fucking idea. Every trade is different. But what I do know is that you will have to wait and it obviously will be longer. Like it just makes more sense, right? Like if you have to wait for your trade here or wait for your trade here. Obviously, this zone has to get hit to get to this other point regardless. So my point's gonna get hit faster than yours. Now, I don't know if it's 1 hour, 2 hours, 10, 30. I don't know. I have no fucking idea. But for trades like this in specific that they're so far away from the area of interest, I would want to wait for a retracement to it so I can have the best entry possible. And I might miss the trade. Like this trade could probably shift the structure and it might not give me the retracement how I wanted to. It might do something like this and it might just go. And I'll just be like, cool. And then I just move on to the next one. There's literally no issue. What's the problem, bro? There's more opportunities out there. That's literally it. Everything makes sense with AUD USD. Say yes. If not, say no. Perfect. Perfect. By the way, I have a question, guys, right? This is just about and 97% understand, which is amazing. I have a question, right? I don't know. This is just like my thoughts, just because like I read some of the support requests. I try my best to not because really some of you guys just ask like the most unnecessary questions, but it's okay. Um, would you guys rather have because I'm just speaking for you guys, right? And I think you guys should have, but I'm not gonna give you guys my thoughts just yet. But okay, so I have to give, and I've decided that we already selected the people that are going to get the Rocket 21 challenge account. So basically, we're gonna give away 50, 50. I think it was 25 or 50, 25 or 50, 50K accounts. But instead of doing that, I was thinking like, yo, why don't we just give you guys like a bonus credit? So I can get that done for LQH like all day. I can literally get you guys a bonus credit or credited or whatever into your account. So like let's say that you would instead of you guys getting something worth whatever, like let's say a 50K challenge is worth 350, I can get you guys credited or a bonus or whatever into your own personal account the same value of 350. You just have to deposit something minimum, like 25 bucks or 10 bucks or whatever, and then you get credited the 350 into your account and it's alive. You can't withdraw it, but you have more money to trade with, and the money you make on top of that, you keep all of it. Like there's certain lot sizes that you won't be able to place. Like it's very simple, right? Like let me show you. Just to explain to you guys real quick. Which one of these ones is it? Okay, it's this one. So let's say whatever, we're gonna trade Euro JPY. Let's say you just put, I don't know, 25 bucks into the account and you want to risk, I don't know, $10. It'd probably be kind of like impossible because just the lot sizing would be so small. So you would get credited an extra 350 bucks. And then there, obviously, you would still be able to have it, but let's say you could now risk 100 bucks and your lot size would go a lot more up and it won't cost you anything. Like if you lose the money, you don't owe it. So would you guys rather have a $350 credit into your account, or would you guys rather have a Rocket 21 account? Like basically you have to go past the prop firm and all that. I think for the beginners and I think for the people that are just getting started, I think if you like learning trading is already as challenging as it is, and then learning to work around these rules is going to be very difficult. I think just for you guys to kind of start off and you guys get the flow of how to properly use MetaTrader and just kind of like actually get a feel for things, I think you guys should go for the live. Just get a feel for it, fuck up a couple times, and then like once you fucked up a couple times, then you can go and be forced to follow risk management rules, which I'm going to talk about hopefully today or tomorrow. And then you can start taking on challenges. I think every trader, every beginning trader should become successful with a prop firm because they force you to learn rules and you leverage a lot more money that you would be possibly be able to have to start off with. And then once you start making a lot of money here, then you can go to your own personal account. But I think just for like the beginning, just so you guys can like, I guess, get the feel of everything and kind of get that live feel of executing the strategy and then potentially making money right away, I recommend you guys go with the credits into your account. So they're both worth the same thing. Just one is basically instant, which is the broker way. You get the money right away. And then this one is just a challenge, and then you would have to go and pass the challenge. So let me do a poll. Like, what would you guys rather have? It's worth the same amount, right? Like there's no difference in terms of cost. It is different in terms of challenge and value for you guys. So right. Which one would you guys rather have? Just so I could start. Oh wow, this is crazy. This is crazy. All right, we have 12% left. I figured. No, I did not think this was gonna happen. All right, these are the results. So it's basically a 50-50. So what we'll do is at the end of the boot camp, basically we'll get everybody's information and we'll decide, hey, what do you want? One or the other? And then we just give you whichever one you want. You can't have both. Sorry. You don't have one or the other. So you have from here until the end of the boot camp, decide what you want to do. Because we can't hand you. It's like, and a lot of you guys have been blowing up the support and asking. And to me, it's kind of funny because you guys have been asking for something that I haven't even taught you how to use yet. It's like I'd say, all right, when you join the military, you're gonna get a firearm and you're gonna get a grenade. And the first day you join is like, where's my firearm and where's my grenade? Well, sir, soldier, I gotta teach you how to use it first, don't you think? Then you can have it. If not, you're gonna fucking shoot everybody and blow us up. Let me first teach you how to use it, and trust me, you're gonna have plenty of ammunition, brother. So it's just kind of funny how a lot of you guys have been blowing up the support about that. But it's okay. So yeah, basically we are just waiting for the break and the retest. USD CAD, practically same exact shit. That's a 2 hour lower high, 1 hour lower high. Looks like we're shifting it right now. Looks like we are shifting it right now. 15 minutes. Looks like we are shifting it. I mean, technically we could have shifted it down here, but I don't really like the 15-minute here. Technically, this could have been the shift as well. Just to play it safe, I would go with this one right here. So the next 33 minutes, this closes above. I'll decide if I'm going to take the trade right there or I wait for a little pullback. But this trade we could take right here because our stop loss will be under this point, and then our risk to reward to this take profit still makes sense. So for this trade, we could buy the trade without having the pullback to the area of interest. You see the difference? Like that's why I have to. If people ask me, do you always wait for this? Do you always need this? Do you? It's like, bro, it's different. Every trade is different. I wouldn't be able to guarantee you that for every trade I would have to wait exactly for this or for like what I'll tell you is you have to exactly go through this whole entire list. And after you go through this whole entire list, you know exactly what you're getting to. And then I can be able to make a decision if I want to or if I don't. So as of right now, this one, once it breaks, I need the pullback. This one, as soon as it breaks, I'm good. Just gotta wait 33 minutes, 32 minutes, and we'll come back to that. Next, Euro JPY. Looks like we are on our way now to the area of interest. So you guys are seeing how we still cannot apply our confluences because we are not just there yet. This is where we were yesterday before the market opened. This is where we are now. So we are still actively on our way. and we simply have to wait for price to make it there. That's pretty much it. I'll put an alarm here just to let me know once we are there. Euro AUD. Same. We are on our way to this area right here. And I'm just going to put an alarm to let me know once we are here. That's pretty much it. We're on our way. We can't do nothing. All we got to do is just wait. And lastly, Euro USD. We are on our way / making it. I think we've kind of made it. I don't love this trade, so I would have to wait for a little bit more confirmations of it, but this should be the 1 hour higher low, higher high, 30 minutes. This is the lower high, broke above, higher low, higher high, higher low, higher high. So the shift of structure here for the 1 hour would be right here. Right here. And then the 30-minute shift of structure would be right here. So we can put an alarm right here. And basically it would let us know. Shift of structure. So once price gets to there, if it ever does, then that's when I go into the market and then I'll start looking at this. That's pretty much it. So this is like a perfect example on what I would do day after Sunday swings. Just get to the market, recheck everything that I analyzed yesterday, and see which ones are pretty much the closest to being entering. And technically, it would be USD CAD and Euro USD because here all we need is the shift of structure. And here we are practically about to have the shift of structure. We just got to wait 30 minutes or 29 minutes now. If all this makes sense, say yes. If not, say no. It's crazy, right? Started practically 3 weeks ago. And if I would have done exactly what I did today, we would have a 99% that would say, nope, I don't understand. And how just 3 weeks of breaking things down can completely change something. And like, this is just me explaining it. Imagine like you guys learning it yourself and then truthfully being able to apply it yourself and using patterns and putting time into it, falling in love with it, making your own mistakes, fixing yourself. Um, like it's if 3 weeks has taken you from 0 to 100, imagine what 3 months will do. And then imagine what 9 months, and then a year, and then 2 years and 3 years. That's why I like the first three things that I asked from you guys before we got started into this boot camp was like, yo, I literally just need your patience, I need your time, I need your dedication to this shit. Now you gotta let time do its thing. Time. And like again, you guys are gonna end this boot camp and you're probably gonna still need me because I've been spoon feeding everything to you. And it probably only makes sense to you and I'm explaining it. As soon as I explain it, things become like clear, like, oh shit, now I get it. Yeah, of course. But then when you do it on your own, you're kind of having this self-doubt, like, oh, is it really like this? Is it not? And that's normal. You're not gonna just not have self-doubt after 2 weeks of technically a week of just learning something because like how to really use things, it's only been a week. Everything like the first week, we didn't even talk about charts. So don't beat yourself up or don't hate the journey or feel lost or be scared because when you start analyzing things, it's not as clear as when I do it. It's not supposed to be. Dude, I've been doing this shit for a long fucking time. And I've taught a lot of people how to do it. So it's easy when I do it because I've done it a lot. It's not supposed to be easy for you because you haven't done it a lot. All you got to do is do it a lot and then you get as simple as I do. So kind of want to give you guys that peace of mind and a reality check that don't think that just because you were here for a month that this is gonna have a full blown just like yeah, you're gonna have a click, but you're like the truth behind your mindset could probably have some self-doubt, and that's normal because you literally just learned this new skill set. And we can practice it as many times as you want. You just simply need time, your own time for you to put into it. So just kind of want to put that out there. Now, any questions regarding this, and I can get into the next topics that I want to get into today. Alex, can you talk about risk management? Yep, that is one of the things that we're going to be talking about. So I'm going to put here one of the things that we're going to be talking about. Okay, I have a question about AU. Oh my God, dude, the question just it. Hold on, guys. I had to turn it off. Two like plus 100. So a lot of the questions on AUD USD and the 15-minute shift to structure. AUD USD 15-minute shift to structure. Yeah, I would not count this as the shift to structure. Maybe you could count this as the shift to structure. Sure. At the end of the day, let's say you do count this as the shift to structure. Guys, the trade is over here right now. There's nothing I can do about it. Like the trade is so far away. Like we're gone from here. Like this trade is 30 pips away. You can't execute the trade here because of the shift to structure here. You could only execute it here. Like, yeah, if you got this right here, sure. You're at the area of interest. You got the shift to structure. You could enter it here. Yeah, but obviously I was not active in front of the markets here. So for me, like I would now need to wait for this shift to structure in the 30-minute or the 1 hour because I did not catch this. But if I was active here, yeah, for sure, I would have probably caught this. Yeah. Yeah. We don't need another shift to structure after we get into the pullback. No. Alex, isn't it possible that you might occasionally miss or overlook some pairs during Sunday swings? For example, the GBP pairs? Yeah, there's 100% a possibility of that. And that's me, you know, you guys can maybe pick up on that, but I guarantee you that 7 out of 10 times the pairs that I miss won't really end up playing out. And there might be obviously many, like the 3 occasions that do, but I can sleep at night with it because I avoided 7. So I guess it's a lot of questions on, do we need another shift of structure on the pullback? No. So we have the shift of structure here. So let's say we shifted the structure here and now we're bearish. On this pullback, all I'm waiting for is the engulfing. The engulfing is going to tell us when the pullback is basically done. We will be talking about risk management in just a second. All right, here we go. Elon, see what we got. See what we got, Elon. I'm just going to copy it so we can read it together. All right. Reading this is going to be funny. I already know it. All right. Hey, hey, Alex, I got a cue. While we mark area of interest between a bullish market higher high and higher low, let's say we drew 3 areas of interest between them. While price is coming back to the area of interest, it's pierced through area of interest 1 and area of interest 2, and it started to shift the structure on the lower time frame on area of interest 3. Does the area of interest 1 and 2 act like resistance? Great question, Elon. Great question. So I'm sure we all understand what Elon is asking. But just to clarify, let's say that this is area of interest number 3, this was area of interest number 2, and then this was area of interest number 1, for example, right? And basically, if now we are at area of interest number 3, if when we take this trade here, are these points resistance? The short answer would be yes, but you don't let that affect your trade. Like, yes, it could obviously act as resistance because this is a level of support and resistance. Like, there is market structure here. It could definitely act as resistance for sure, but that's not going to affect your trade. If your trade is bullish and you're trading with a trend and the area of interest is strong, it's just going to pierce through these areas of interest exactly how it did on the pullback. So if it pierced through it on the pullback, it should pierce through it when you're trading with the trend and you're buying at a solid area of interest, just how I did here. For example, like I don't have to go into a bunch of different like examples of it, but this could be a perfect example. Like you can see it piercing through this resistance. Let's say this is your take profit, blah blah blah. So great question, Elon. And the answer is does area of interest 1, 2, and 3 act as resistance? It could, and it could easily go into area of interest 1 and then hit your stop loss, or area of interest 2, and right before we get into your take profit, hit your stop loss. But that will happen out of 10 trades, maybe 2. And the 2 that it happens sucks. You just gotta bite the bullet and then move on. It's part of the game. It's the cost of doing business. So, great question. I just want you to go over the patterns. I'll go into a little bit more depth in the patterns because I feel like I haven't talked about it as much as I wanted to. Sorry, guys. Yes, there is another thing. So it's called the whip thing. And this is very easy, but I'll talk about this later. Did you have entered on the 15, 30-minute shift of structure? I think I already did that. Is it okay if you have already entered in USD CAD? Well, I don't know. Ask yourself, is it okay? Have you had your shift of structure? Have you done this? Have you done that? You ask yourself if it's okay. Can you tell us why you're not interested in the other markets? That's something that with time, first I need you guys to get why I'm interested in it, and then you'll understand why I'm not interested in it. But I can't explain to you why I'm not until you don't fully understand why I am. I feel like I've gained 5 years worth of knowledge in 3 weeks, practically. How long are we going to get this kind of analysis from you? Every single Sunday on Sunday Swings. All right, so I see a lot of spam question. I will like I'm literally like it's so easy to ban you guys, or I can just kick you guys out. Don't spam the questions, guys. Like it just makes it so much. I think there's a lot more questions that there really is, and then I end up skipping all the other ones. Please don't spam. Like Danny, this guy literally spammed the same question I think 100 fucking times. So don't spam your questions, guys. What other questions do you guys have? Don't get mad if I kick you guys out, bro. You guys just simply aren't following the rules. It just makes it more challenging for me. All right, here we have another one. Hey, Alex, for example, let's suppose that we are in a trade to go short and the 4 hour and the daily time frame start to go against us becoming bullish, but we have not reached our stop loss yet. What do we do? Do we close the trade? Federico, you only close the trade at your stop loss or your take profit. You don't fuck with it in between. That's the point of set and forget. So if the trade starts going into your stop loss, let it hit it. Why are you scared of losing? It means you risk more than you were supposed to. right, let me just turn off the chat for a second. All right. So if I get three confluences on the daily and three on the weekly, does that mean that it is a full score? Also, if the weekly is bearish and the daily and the 4 hour, okay, cool. So Melissa, this leads me to understand that you must go watch a recording, but I will answer your question indeed. So Melissa, this is your question. I'm gonna do this for another like 5 minutes. So if I get three confluences on the daily and three on the weekly, does that mean that it's a full score? Also, if the weekly is bearish and the daily and the 4 hour is bullish, should we look at the weekly area of interest? You should look at the weekly area of interest just to know where you could have your take profit set and you know to get out before the weekly gets to that area of interest. Once again, just a quick example. If the weekly is bearish and the daily and the 4 hour are bullish, yes, you have to have your weekly area of interest. So you know when you take the counter trend trade on the daily, know when to get out before we hit the weekly area of interest. And then to your first question, it's no, you don't have, I mean, yeah, you would have a full score, I guess, but you still need to go through the entries and the shifter structure. Just wanted to pick your brain. When you said the daily POS has been retested, what the fuck is POS? Oh, previous. I don't even know what POS is. Why do you consider USD CAD area of interest with three touches? I don't. I don't know where you got that from, partner. Please go watch the recordings. All right, 5 more minutes of this and then we move on. Can you talk about more about psychology? I feel like I've been preaching the whole entire boot camp about psychology. Does everyone get a challenger credit? Yes, it was only gonna be 50 people, but now it's gonna be basically everybody. Are you gonna talk about taxes? Nope. I'm not an accountant. I'm gonna talk about it briefly, but I'm not gonna fully break down accounting on how you should do it because everywhere is different. Some things that I do here are probably completely irrelevant to how you can do it in London, for example, or even a different state in the US. So I can't because I don't have all that knowledge, and what I would do here in Florida specifically probably won't apply to everybody. The 30-minute shift of structure, sure. I mean, yeah, technically we would have the 30-minute shift. I mean, yeah, to me, I would count this as a 30-minute shift of structure. So to me, this has a shift of structure. I mean, you could, guys, again, you could you could do whatever you want, bro. If you want to count that as your shift of structure and you want to be like, bro, I want to enter right now, dude, you can. Like I'm like again, you can do whatever you want. The beauty of this is that you know exactly what you're getting into. For me, I like I see myself as like I have to be exclusive in the market. I have to be the prize. The market is not the prize. The market should be fucking honored that I am even looking at it. And then when I go execute a trade, it should be ready to go straight into my take profit. It should not have to put me through drawdown because it should be honored for me to be here. If you just want to jump in any trade for any excuse, like, okay, yeah, you know what, I would count this at the lower high and fuck it, this shit the structure, dude, by all means, you can really, like, you could do that. There's nothing wrong with that, but not me. Like, I am very selective. Like, I find the most amount of reasons sometimes to not even enter a trade. And like I can have a beautiful trade, right? I can have a beautiful everything. And when the trade gets to the point of entry, I can then just be like, fuck this. Like, I don't know. I don't like the way my hair looks today and I won't take it. Like I'm very selective with the trades. I don't look to enter every trade. That's why I don't care about missing trades. I rather miss a trade than enter a trade and not have been fully confident. Like if I'm just a little bit skeptical, I just won't execute the trade. I don't have to execute the trade. My job here is to not enter every trade. My job here is to make money. And I make money by being selective. And if I enter every trade, I'm not being selective. So you guys could have entered on that 30-minute shift to structure if you wanted on USD CAD. Not me. I rather wait for the 1 hour. Just looks cleaner. It's Monday morning. There's a whole week ahead of us. There's 5 other markets that we could enter a trade if it doesn't give us the opportunity. There's no rush. I've had 2 great weeks in trading. Like, so you guys have to get that backstory to where we are now. Like, I can't just pretend I can't just force it, you know? So you could, but the beauty of all this is that you know exactly what you're getting into. So let's say you do enter the trade right now in USD CAD and you're in a little bit of drawdown, where you'd be like, well, it's because I didn't wait for the 1 hour shift structure, for example, or whatever. But that's the beauty that you know exactly what you're doing with anything. Why don't you do Sunday swings? I do Sunday swings every week. All right, I just kicked out 2 people because they just spammed. It just, bro, it makes it so hard to read this shit. Fuck. All right, cool. All right, perfect. So now that we understand basically all of these topics, let's talk about the next ones, right? Which is going to be risk management, patterns, and the wick thing, right? So let me start off with the wick thing. So when I start off any single trade on the weekly Sunday swings, I always wait for the wick thing. What the fuck is the wick thing? Well, every single week, to me, has to have a wick. I don't care how big it is, it just has to have a wick. If you notice here, there is a small wick here, and I think I've already talked about this, right? But I'll just talk about it again. Here's a wick here. Here is a wick here. Here is a wick here. Like, I have to wait for the market to just fluctuate into that direction before actually entering the trade. I needed to have the wick. There is swan events like this one where this market basically opened, and from the moment that it opened, it just continued going to the upside. Like literally, it just opened and then it just went up. It did not have a little wick and then decided to go up. This market opened, went down, and then it went up. This market opened, went down, and then it went up. This market right now, when it opened, it has gone down, and we're obviously expecting for it to go up. So whenever I have a market open, let's say it's Sunday night, and this market has just opened, and we just created the move up without the wick at the bottom, I am very skeptical about the trade to the point where like I won't even look at it until we don't create that small little wick. I need the wick to be created in order for me to be interested into the trade. If I don't have a wick, even something as big as that, it's gonna be something as small as that, I will not be interested in the trade. When the market opens, it has to say this market closes like this, the market has to come down, create that wick, and then have the move. The market cannot open, and then as soon as it opens, it just goes straight up. To me, it's not a real candlestick, it's not a real move. It's all fake. Because to create that wick right here, right? So let's say like we're this far into the move and we have not created the wick. Dude, you guys understand that for us to create that wick, price has to go completely back into where it started, then break under to create the wick, to then have the push up. So the reason why I wait for the wick is because let's say the price is here right now, whatever. To go create this wick, you have to have the pullback. It has to come all the way back down. And that's where I'll get a sniper entry because I know what the market's doing. I know the market is now having that wick, and then it's going to continue respecting the move that it already had. And then it has the move to the upside. But we get the best possible entry because we were patiently waiting for the wick. Now, what happens the majority of the time is as soon as the market opens, basically what it's doing now, as soon as it opens, it creates the wick on the start of the week. And then towards the end of the week, it ends up happening with the actual move. Now, obviously, every week is different. Every trade is different. Every candlestick is different. Like it's very hard to have 100% wick prediction every single week. But what is very easy is to predict that every single week there has to be a wick, no matter what. Now, the wick is only where I'm looking to enter the trade. So, for example, let's say right now we're bearish, right? And let's say that this market would have opened up like this. Let's say we just opened up, and when we opened up, we just went to here. That I don't give a shit. I don't need a wick to the downside here because we're not entering buys. Like we don't need this to create a little wick down here to then have this area up here. We need the wick to be created here. So let's say we're at this area and then this price just opens and goes down. That's not good. We need it to go up, create a wick, and then go in that direction. Basically, the wick is created with the direction that you're going. So if you want to go down with this market and you're at the area of interest, you need it to create the wick into the area of interest or close to it or whatever to then go. I might have confused you guys a little bit there, and it's totally fine. I'm going to do more examples. This right here could have not created a wick, and it's totally fine because we're not at the area of interest. This right here could have not created a wick, and it's totally fine because we're not at the area of interest. This could have not created a wick, and it's totally fine because we're not at the area of interest. The only wick that we care about is when we are at the area of interest. Once we have a wick created here, then we could wait for the push to the downside. This could have not created a wick, and then we would be fucked because we need the wick in order for us to be interested in this trade because we are at the area of interest. Since we're at the area of interest, we need the little wick, and then we can have the push to the upside. AUD/USD, we could have not had this wick, and then we were basically fucked. If this market decided to just open from here and then have it push to the downside, I would have never even looked at this shit. You need a wick. We need the wick to fluctuate, give us that momentum, and then we enter the trade. If that makes sense, say yes. If not, say no. Okay. I mean, not bad. I get it. I get it. I could have confused you guys a little bit by the way I explained it there. The thing I would say is basically you just need the wick. You need to have a little wick on the weekly. And it's gonna happen where you start off the week and it's Monday like right now and there's no wick. And you're probably like, yo, what do we do? What do we do? You just gotta wait. So to the 9% that don't understood, what questions do you have about this? There's no way I could have figured all this out without that, of course, bro. If the wick is the sign of strong rejection, why not use this zone of wicks like an area of interest number 3? Because it's just not structure. Wicks are just wicks, structure. Is it only on the weekly? Yes, it's only on the weekly. Yes, Trey. Do you enter? Do you enter after we see the wick? No. Like the wick is just like what is needed to then you be ready to look for the shift of structure and then the engulfing. Remember, you always like after the wick, you look for the shift of structure and the engulfing. You can't just enter off of the wick because then what the fuck? What about the shift of structure and the engulfing? You know? Are you more insecure about entering the shift of structure on the 15-minute instead of the 1 hour and 30 minute? I just enter whichever one looks the cleanest. You said if there's no wick means that it's fake. Ah, to me, it's that it's fake. It's supposed to mean that it's a strong move, but to me, it's not a real move. Like it's just every single candlestick. Like just look at the charts, guys. Literally, look at the charts. Every single candlestick has a wick on the weekly time frame. The one that does not, why is it real? Like, why do we even pay attention to that? Like every single candlestick has a wick. When a candlestick does not have a wick, it's just a red flag to me. And I'd rather not trade. Like, why do I want to trade a candlestick that happens every 100 candlesticks? Why do I want to be that guy? I only want to trade a candlestick that has happened in the past because we are in the business of trading patterns. We're not in the business of trading black swan events. So basically, you want to see the footprint in the market going to the direction. Yes, correct. The wick needs to reject the area of interest. It doesn't have to reject it. It just has to create something. Like, let me see. Let me see like one more example. Maybe it's clear things up. Right. So on this pullback, right, we've had great doji rejections at this area of interest, right? We're on the weekly time frame. On the next week, so right, we've had a bearish push here, whatever. On this next week, let's say that we are ready to enter this trade, and this trade, when the market opens, it just does this. Well, first of all, if it just does that, one, it doesn't give you an opportunity to enter the trade because this trade just blows up. The trade literally just goes. So first of all, if it does this without a wick, you won't even be able to enter the trade just because the market didn't give you a chance. That's just the first thing. So since it didn't give you a chance and you want to enter the trade badly and you need it and you want to enter it, well, don't enter it up here in the middle of the move. Wait for the wick to be created because statistically proven, 9, if not 9.5, if not 9.9% of candlesticks need to have a wick on the weekly. And if the weekly has opened up and it has not created that wick and you've missed your trade, don't worry. There is a 99% chance that it pulls back to create that wick. And then there you're looking for your entry actively. Now you're looking for a new shift of structure and a new engulfing where now you can have a better entry. And then there, when it's creating that wick, if it does have that, that's the best area where you then want to have the push to the upside. So the like waiting for the wick is basically waiting for the re-entry because when the market opens up and it just has the move, you don't have a good opportunity to enter the trade. And while the trade is pulling back, right? So let's show you this did have the pullback and it's pulling back. Don't get like this is more of like an entry strategy kind of thing. Don't get FOMO wine enter as soon as it just pulled back 50%. Realize that the weekly has not created the wick and that this has to go a lot further into the area than you could imagine. So don't just want to basically hop right in as soon as it starts pulling back. Realize that it has to create the wick at the bottom, and then there you can wait for another shift of structure and potentially even avoid a loss. You can literally wait for the shift of structure, never get it, and the trade just ended up going into the complete other direction. So the wick trick or the wick thing is basically for you to get a real entry. Like while this is pulling back, you literally don't do anything until it does not break under, create the little wick, and then you start looking for the shift of structure and the engulfing because now it's officially been at the point where it could have created a wick, something like this, And then if you do get it, then it's the fucking perfect area to then have the push to the upside. So it's more of like an entry confirmation thing and more to avoid you entering the trade at such a high point. Because if the market opens and it just does this, you're going to get a very shitty entry. And you really don't want that. You want to make sure that you can have the best possible entry possible. Does that make sense now? Yes or no? Beautiful. Beautiful, beautiful, beautiful. I got it. It's just time. Time with everything. Time, time. All right, let's check it. 1 hour time frame. Did not give us the shit the structure how we wanted to. So we just wait. 30-minute time frame. If you want to count this as the shift structure, sure. Let's see if it has a bullish engulfing candlestick right now. So let's say you do want to enter off of this shift to structure. Let's see if there's a bullish engulfing somewhere in here. And then the 15-minute, let's say you want to count this as a lower high as well. It did shift to structure. Now it's pulling back. Let's wait to see if we can have an engulfing, which I do think we could because we are approaching the area of interest. I low-key like this 4 hour time frame. Like if the 4 hour would close like that, it would be great. And you might ask me, why? Isn't that a rejection candlestick? And this is now where I want to talk about a little bit of the wick fill. So there's a wick thing slash wick trick. And now we have a wick fill. So this one is more of a higher time frame thing, right? So wick fill is mainly for the 4 hour slash daily. And I'm telling you right now, this thing works like a charm. And it's going to take some time for you to be able to implement it. It does not happen every week. It does not happen on every trade. It doesn't happen all the time. And there's certain ways how it happens, and it's going to be a little complicated to explain. And I would much rather not even explain it right now. Yeah, I'd rather not even explain it right now. I'd rather save it for like the next 30 days. So remember, after this week is over, we're then going to enter the 30-day post boot camp, which is basically two calls that we're going to enter throughout the week. And we're going to basically do what we did this morning, break down the markets and just see what's going on. And we're kind of like live trading in a way and looking to see what we are interested in doing in the market and basically just talking about the market and then just updating things on the strategy, kind of like the wick fill, stuff like that. And I would like to have and I'm sure it'll come, right? I would like to have a live example of a wick fill and then it play out live. And as of right now, we don't have one. So I don't want to explain something that is going to be kind of hard for it to not happen live. Like the shit, the structure, you guys get it and all that because we have had live examples. And the wick fill, we haven't had one just yet, so I can't really explain it. And we'll wait for this one. So the wick fill, we'll come back to it. There'll be plenty of examples onto that just later. Risk management. So I do want to talk about risk management because I definitely believe that without proper risk management, you can have the best strategy in the world and you will not be successful. Plain, simple facts. You will not be successful if you do not use risk management. I tried to find every single way around this. Bro, it's just fucking impossible. You need risk management to succeed, whether you like it or you don't. And let me actually do this. And I want to talk about risk management on a calendar perspective, right? Just to make sure if you guys can see my screen, type one. If not, type two. Like, do you guys see the calendar? Perfect. All right, cool. Thank you. So, risk management is something that I like to use in terms of long term, right? Because you have to picture yourself as a investor, right? Yeah, you are a day trader, but you got to see every single trade as an investment. And great investments don't come every single day. Sometimes only every single week, and maybe not even once a month. So these investments that you make, you can't just go like, you know how many fucking pitches I get every single day on Instagram that people want to do this, do that, and they want money for this and that. It's fucking endless. It's never ending. So I do literally like I am playing defense all day, and my capital is it's like my ammunition, and I am very selective on how I pull the trigger and what I shoot at. It should be the exact same. Like each bullet is could have a great opportunity of having a return. Each bullet means something. You're not going to just shoot blankly into the air, into the ground, or into the no man's land because each bullet is very important to you. And each dollar you invest into the market is very important to you. You worked for it. So the way you correctly use risk management is when it's the right time to use it. Well, not when it's the right time to use it. It's how to strategically use it on the right time to use it. Let's say right now that you're hunting, and let's say in June and July, animals for whatever reason aren't at a specific spot that you're looking to hunt. You're not gonna just for no whatever fucking reason just start shooting into the woods, seeing if you hit something. You're wasting your ammunition for no reason. Same thing goes into the markets. June and July tend to be the markets where there's no volume into the markets. So why would you just go and risk a lot of money on trades that aren't really supposed to have a move because it's summer and the markets don't tend to move during summer. So the way I use risk management is when it should be used. So I always am more aggressive on the beginning of the year and the ending of the year. For me, my hot streak is from October to March because it's October, November, December, January, February, March. It's just 6 months of just back to back to back to back to back high intensity trades. Because to me, it's the markets that have statistically shown me the most amount of money. I've always made the most amount of money trading in these months right here. Then I kind of have like a so months when it comes to April, May, June, July are absolutely ass because it's the summer, the banks are closed. And then August and September tend to be okay months as well. So what I tend to do is I tend to have my risk management revolved around the months that I should be aggressive and the months that I should be conservative. Now, the way it works, or the way I'm going to put you onto it right now, is how I used it for, I don't fucking know, 3 years. This is how I did it for 3 years consecutively. January, right? Let's say you want to start off the year on a great month because it is a great month on the aggressive side. The whole month of January, you need to risk 2%. No more, no less. It does not matter if you win 5 trades in a row or you lose 5 trades in a row. You have to always risk 2% inside of the month of January. No if, ands, or buts. Does not matter if it's an A plus setup, a triple A plus setup, a quadruple A plus setup, or it's not a great setup. You always will risk 2% on week 1, 2, 3, 4, 5, 6. The whole entire month of January, you will risk 2% if you win 5 trades or if you lose 5 trades. And I'll explain why in just a second. So when you end off the month in January, whatever you end off, then you decide, what am I going to do in February? 1 or 2%. Let's say, fuck it, it was a great month. We'll do 2% again. Same exact thing. You stick through the 2% for the whole entire month. No modification. Let's say you do the same thing here for the whole entire month. You stick through the same percentage through the whole entire month. If you guys notice, like it's so easy to like learn things off of my Instagram if you just pay attention. If you guys notice, like the last 2 weeks or 3 weeks, like don't you see that I'm risking the same amount? Like don't you see that I have the same amount of lot sizes and like my profit is exactly the same? A little bit more, a little bit less because I held the trade a little bit more. But like when I lose 100,000, and when I make 250K. Like, doesn't that like show you something that every trade I'm risking the same amount? Because that's the risk percentage that I decided to use in December. I mean, in November. I decided that in November I'm going to be risking 100K per trade, whether I win them or whether I lose them. That's just how much I want to risk per trade. Now, if I want to risk instead of 100, 150, 125, well, that's for me to hold myself accountable for breaking my trading rules, but I know exactly what I'm doing. So when I lose more than I should, I can't get mad. I can't go and not live the life that I'd want to live just because I lost a little bit more than I should have. Or I can't go and then be conservative on the next trade. No, if you decide to fuck up, you keep going. You fix your fuck up. So that's just the percentage and the approach that I wanted to take. Now you set whatever you're okay with doing on your account, whether it's a challenge, whether it's just personal, whether it's someone else's money, do whatever you want, but you have to pick the amount that you want to and don't change it for anything. You stick through that percentage the whole entire month. And I'm going to explain to you guys in just a second why. April are okay months. You can cut that percentage down to 1%. And same thing here, 1% the whole entire month. You stick to that percentage. The whole entire month, you stick to that percentage. Now in June and July, you could either do two of one things. You can either just not trade, or you can lower your risk even a little bit more, 0.5%, and be even more conservative, or you can still risk the same 1% that you would in a normal month. But I would just say minimize the amount of trades that you possibly take. So if you were taking 2 trades a week, take 1 trade a week or 1 trade every 2 weeks. Like be as conservative as you possibly can in terms of the amount of trades you're taking. And then obviously back in August and July, you can go back to the 1%, how you were doing normally. And then in October, November, and December, you could turn it up again. And then you can go back to your 2%. But the key importance here is that it has to be the same percentage the whole entire month, whether you win 5 trades or if you lose 5 trades. This is so crucial. You guys have no fucking idea. If this makes sense, say yes. If not, say no. And I'm going to explain a little bit more details into this in just a second. And for my more experienced traders, guys know exactly what I'm talking about. Like, there's just some really good months, and then there's just some really fucking ass months. Some people say that December and the holidays are slow. I think that's bullshit. I think to me, they've always worked out great. Always, always. I've always done great during these times. Great. So 99 or 98% understand perfect. So why is this so important? Well, let me explain right now. Let me explain right now. If you guys can see my screen, the trading view, type 1. If not, type 2. Great. Thank you guys. All right. So let me see what's the simplest way I can do this. Let me think. Okay. Let's say you have a $10,000 account, right? And inside of this $10,000 account, you decide that you want to risk, let's say $100, right? So let's say you want to go and risk 1%, which is going to be $100. Let me see what type of, let me do some math real quick. Let's just keep the 1% and the 2% just to be simple, right? So $10,000 you want to risk. Shit, where'd it go? It's okay. I can do it right here. Okay. So let's say on a $10,000 account, you're going to risk 1%, which is $100. And then that is going to then be risked on a minimum risk reward on each trade for a 1 to 2, which is going to be a minimum of, let's just keep it simple, right? Of $200, right? So you risk 100 to get 200. Very easy, right? And let's say you take 10 trades over the course of the month, right? And let's say 10 trades over the course of the month. And then let's say out of these 10 trades, you have a 50% win rate. So you don't have to be a rocket scientist to really figure this out. Out of 10 trades, you are going to then win 5 and then lose 5. So here we're going to win 5. 5, 1, 2, 3, 4, 5, and then you're going to then lose 5 over here. So every single time you win, you're going to then make $200. And every single time you're going to lose $100. Cool. And by the way, a 50% win rate is very normal. I just say it's on the average end. It's not on the low end or not at the high end. It's very average. It's very, very doable to get a 50% win. Like a rookie can get that. Cool. So here you have lost a total amount of $500 in the negative. And then over here, you have now won $1,000. So if you notice, plus, is it plus? If you notice, your wins have outweighed your losses by double. So you can lose 5 trades at 500 and then you'll win 5 trades at 200. Now, if you ask me, you can do this over the course of 10 years and you will make money no matter what, simply because you have a profitable risk to reward strategy. If you have this same win rate right here, but let's say you fuck up the 1% and you fuck up the risk to reward, all this shit goes out to the window. And it's very easy to fuck this up. Perfect example could be, by the way, this right here is the most normal case scenario. Your win outweigh your losses and you win and lose the same amount of times. Just whenever you win a little bit more than you lose. So this, now let's say we do at a, let's bump it up to a 60% win rate, but you risk 1% on the 10,000 with a minimum RR of a 1 to 2, but this is where you want to come in. But whenever I win a trade, I want to up my risk to 2%. So whenever you win a trade, you're going to up your risk to a 2%. Okay, sure. And now you win 60% of the times. So you are winning more times than you lose. And you are upping your risk. That means you should make more money, right? Well, let's find out together right now. You start off with a winning trade. And this winning trade is going to give you $200. Cool. So you made on this first trade right here, $200. Okay. Now on the next trade, so your account right now is at 10,200. Cool. Now on the next trade that you're going to take, you're going to up your risk to 200. Okay, sure. But then that next trade you end up losing because you think you're the shit. You start seeing things you're not. And now your account is back at 10,000. All right, fine. You know what? I'm Alex G. There's no way I can lose. I'm going to risk again $200. So here we have minus $200. I'm Alex G. I got to take another trade, but I'm going to go back to my 1% because I only up my risk whenever I win a trade. Okay, cool. Next trade, you win it. Cool. You only win $200. Your account is back at 10,200. Back on this trade right here. We're only going to use one because it's going to be a lot easier to manage. Your account is back at 10,200. But again, whenever I win a trade, I up my risk to 2%. Okay, cool. The next trade you lose again. You lose the next trade. Then you're back at the same exact break-even point because whatever you just made, you just lost it again into the market. Cool. It's very normal. It's average. Now you say, you know what? Fuck it. I'm going to just stick to my 1%. And then on that next trade that you end up taking, go back here, you're at 10,200. You're at 10,000 again. Now, on this next trade that you are taking, you're then going to risk 1%. Shit, you lose that trade. So now when you lose that trade, you're going to only lose $100 because you go back to your 1%. Right? Cool. Normal. Now you're at 9,900. The next trade that you take, you want to risk again the same 1%. And that trade, you win it. Okay. Now, when you win that trade, you are only going to make $200. And when you make the $200, you're back at same exact thing, which is going to be you're up 200. And now you are back at 10,100. 10,100. Next trade that you take, now you got scared because you lost. You only end up risking whatever, same 1%. You risk 1%, and then here you would then risk, or you would then gain 200. Now you're at 10,200, 300. And then your next trade, you lose because your win rate is a 60%. So you have 6 wins here, and then we need another loss. Then on this next loss, you risk your 1% again, and then you lose it. And then let's say here you have a minus $100 once again, and you're basically back at 2% profit. So you did all that to literally only make $200 because your win rate and your loss rate does not matter. It's how you properly use the risk management and how you stick to the risk management. Sticking to the risk management is by far the most important thing because if whenever you win 200, you lose 200 again, you literally did nothing. Like you just wasted a fucking winning trade. Because on the next trade that you went to go take, again, then obviously we would just add one more and then you would be up whatever, another 200. Like you're up half of this right here. So we have 4 and 4. So we add another win here, which would be this. You go back to risking the 1%, and then you make another $200, right? Whatever. You're up 4%. Cool. All this shit, you have a higher win rate than over here. And then you actually made less because over here, your account is at 10,500, right? 10,500. So here you have a smaller win rate, but a better risk management. Here you have a more win rate, but you made less money. And this is in the event that it goes in this order. Because if you start upping your, and this is just by whenever I win, I'm going to risk double. And then that shit never ends up going on because you can lose 2 times in a row. And then whenever you win 2 times, then you get scared. Like it's just not, like this is not sustainable, right? Because there's emotions and everything tied into place here. But you basically just, whenever you win a trade, when you up your risk, you then go and lose it because the profits that you made, you put them back into the table. And that's not how it goes. Like for a beginner trader and for you guys getting started, there's a more advanced way how to do it. And again, I'm going to teach that later into the 60-day bootcamp. And I just said, I'm going to have to give you guys the foundation first, and then you guys can go and do it. But whenever you win a trade, risking your original 1%, and then you up your risk to then 2% because that's how much you want to risk on the next trade. And then the next trade, you lose it. You just lost the winning trade and everything you did on the first one because you didn't follow your trading plan. And that's not the right thing to do. So you don't want to have a risk management strategy like this. This is not sustainable. This is not going to make you profitable. And this is just going to fuck with your emotions so much more. It's so much simpler to just like look at it. This just looks a lot simpler to read rather than having to add more shit to yours, bro. Simple. Risk 1%, close out at a 1 to 2. That is it. And these numbers start getting fucking scary. Like I'm talking about scary when you do this. Turn this 1 to 2 to then a 1 to 3. This 1 to 3 would then mean that every single win that you have would be $300. And now this is where shit really starts. Like it just starts escalating so fast because you're having a greater risk to reward. And now, let me just do all this. 300. Sorry, guys. Fucking people are blowing me up. So when you have the greater risk to reward, it's where the secret sauce is. Because now instead of this being $1,000 gain, this is going to be a $1,500 gain, I think. 3, 6, 9. Yeah, $1,500 gain in this move right here. And now you're up another 1,000 or whatever. So the secret sauce is going to be inside of, like, for you to make more money, it's going to be inside of the risk to reward. This right here is the secret. This is what makes you really profitable, not this and not this. This does not matter. You can completely erase this, not even care about this shit. Trust me, you're going to win. You don't care about how many times you win. Forget about this. This, you have to just stick to the same one. There's no ifs, ands, or buts here. Stick to the same percentage, and that is it. There's just no other type of conversation that could be happening here. This, you pick the percentage you want to risk for the month, and then you fucking stick to it. You don't change it. You don't add to it. You don't. The whole month, you stick to the same fucking percentage. This is the only thing that you can modify. And when you do, you only modify it for the better. You only modify it to go from a 1 to 2 to then a 1 to 3, or then a 1 to 4, or then a 1 to 5. You never go down. You never go from a 1 to 2 to then a 1 to 1. No. If you go from a 1 to 2 minimum to then a 1 to 3, and then a 1 to 4, and then a 1, like you just only go up. If you start off with a 1 to 5, sure, you could go down to a 1 to 2, but never below a 1 to 2. This is where the fucking money is. Because I could literally lose 30%. Like, right? So let me set another example. Rich, right? Let's say over the course of 10 trades in a month, let's just get this right here. Let's get this one. And I'm sure a lot of you guys have seen this example before, but I'll do it again just so it gets clarified for any beginners. But whatever. Yeah, whatever. Let's say we have a minimum risk to reward of a 1 to 3, but we only win 30% of the time. So out of 10 trades, let's say out of 10 trades, we only win 3. And then we lose 7 of these trades. 2, 3, 4, 5, 6, 7. So whenever we win, we have a 1 to 3. We will then win 300. And then whenever we lose, we will then lose 100. We're going to obviously, I mean, it's just simple fucking math, right? And this is like what any beginner will have. Any beginner will probably start losing 60, 70% of the time. And that's fine. There's no issue with that because when you have a positive risk to reward, you're gonna like, dude, I'm telling you, it's so easy to make money. You just need to have a profitable winning risk to reward. So whenever you lose this amount. Whenever you win this amount. I don't know why the call out is coming out, but it's really not a big deal. So you can lose here, you will lose $700. And then here, when you win, you're going to then win $900. So it does not matter how many times you actually win or lose. This does not matter. What matters is how much more you win whenever you win rather than you lose. And how consistent are you with that? Are you going to stick to the same percentage the whole way, or are you then going to change it? If this makes sense and it is crystal clear, say yes. If not, say no. Like, this is very, very easy to understand, but it is very, very hard to go execute. And I get it. I'm a victim of it as well. Don't you worry. Because let's say you take the first trade, let's say you take the first trade and then you win 300, right? And then you go, and by the way, it is a 98% pull, so everybody understands perfectly, right? Because let's say you go and you take your first trade and you risk 100 and you gain 300. Cool. Feel like the man. And then let's say the next trade you go take it and then you win as well. Now you're going to be at 10,600. Brother, you feel like a fucking G. No one can tell you shit. But then the next trade, you lose. Now you're at 10,500. Okay, just a little quick loss. We're still up. Then you lose again. And then you're at 10,400. Okay, at least we're still up. Then you're at 10,300. So you just took like one trade that you did, basically got completely blown out of the water because of 3 completely different trades. Like 3 trades that you waited for the trade to get to the area of interest, wait for it to have the trends in sync, wait for it to have the shift of structure, wait for it to then give you your engulfing, wait for you to be in the right session. Now you guys realize that once you wait for all that shit, having such a low win rate, it's actually very difficult. Like, it's very hard to have a low win rate when you wait for all of that. So Even if you still have a low win rate after waiting for all that, you will still be profitable because you have a proper risk to reward strategy. This is the secret right here. But with what I've taught you so far in the 30-day bootcamp, my goal is for you guys to not have this, right? I don't want you guys to have a low win rate. It's practically impossible. Like, obviously, it could still happen, but it's very difficult if you follow the strategy for you to lose 7 trades out of 10. It's just very difficult. There's so many confluences that you could wait for, and that can minimize the amount of times you lose. And I'm going to teach you how to even do that further in the future. But this will never happen. And even if it does happen, if you just have a great risk to reward, you will still end up positive compared to how many losses you had. So this is by far the most important thing that I could have possibly taught you into the boot camp ever. Like, you cannot know anything about trading at all. Like, I'm talking about a potato, dude. Like, you know, fucking nothing. But you just have a proper risk marketing, a proper risk management strategy. And you say, you know what? Whenever I go to the market, I'm gonna risk $100, and whenever I win, I'm gonna win 300. And whenever I lose, I'm just gonna lose 100. Like, literally, you just go to the market blind. You just click buy, and then you take profits of 1 to 3. And then whenever you lose, it's just a 1% of your account. Like, you can literally be fucking blind, and you do that over the course of 10 trades, you will make fucking money, because out of 10 trades, it is impossible that you don't win a minimum of 3. It is just like, go and do it. Literally, go and do it. Go on the 15-minute time frame, open up a demo account, and just take 10 trades blind. Just click buy on one, click sell on another market, click sell, and then click buy and click whatever. And then just have a minimum of 1 to 3 on all the trades. And then just wait for them to play out. It is impossible for you to not have some type of gain at the end, because the market's a 50-50 at the end of the day. And even if it's a 50-50% that you're going to win, when you do win, you're going to win 3 times more than you lose. It's just simple statistics. Like, I have a video plan for this as well. Like, I want to get a random stranger and teach them how to use proper risk management on how to trade, but not teach them how to trade. Be like, look, bro, whenever you go fucking bet, you just always have a minimum of a 1 to 3. That's it. Doesn't matter what the fuck we're reading, dude. Just, what do you want to do? Buy or sell? Sell? Okay. Right here, we go to sell, 1 to 3. All right, cool. Now we'll wait. Like, it's so easy, bro. Like, I don't know. Maybe I'm super passionate about it or whatever, but I think it's just common sense. If all this makes sense, say yes. If not, say no. Very simple, very obvious, right? So what questions do you guys have regarding this risk management right now? How do you suggest scaling from the 1 to 2%? Just gonna take ages to grow an account with just 4 trades a month. Can you speak more on this point? Yeah, dude, that's a great and it's a valid question. And it is very difficult for you to scale a personal account with just 2%. That's why I've been recommending you go to a prop firm, you go get profits, and then you take that to your own personal account. And then I have a more aggressive strategy on how you can grow your account, but it's more aggressive. And I could only teach that once the basics have been embedded. But yeah, it's not going to be possible for you to scale an account with 4 trades a month with 2%. Just the math doesn't math. Okay, this is a great question here, and it, like, I've already answered it, and I'm gonna read it out loud, right? I gotta read it over the top. Okay. Hi. Hi, Alex. I have a couple of questions. Firstly, why not risk more on the higher grade trades? Okay, because the higher grade trades don't mean that it's going to have a higher Like it does mean that it's gonna have a higher percentage of going in your favor than not, but it doesn't guarantee anything. Like it doesn't mean that it's 100%. Again, this is a probabilities game, and we just wait for the best type of probabilities, but we could still fucking lose. So since it's not a guaranteed, we can't constantly be modifying or something that is not guaranteed. We only guarantee the minimum we lose, and then we only wait for those greater trades. So you don't want to move your percentage on how much the grade is graded because this is just how I look at the market, right? I am not a fucking quant. I'm not an AI. I'm not a I'm not a bank, like I don't have inside information that you can actually have more concrete decisions made around it. It's just odds that I believe are going to be in our favor. So, because the higher the grade does not mean the higher your risk. And I know that should make sense, but when you start executing the strategy, you're going to have A plus setups. And again, the same thing out of 10 A plus setups, you will win five and you will lose five. So even with A plus setups, it's still 50-50. With B plus setups, it's still 50-50. C plus setups, it's always going to be a 50-50% win rate. Obviously, like I have to say that to cover my ass. Obviously, it's a bit higher than that if you wait for them correctly, but you always have to be skeptical in the event that it's always going to be a 50-50. So that's why you cannot risk more on the higher grade trades. Second question, when you say risk percent, does that mean you risk 1% of the original account value or the new account value? For example, I got it 100%. Yes, I always risk 1% of the original account value. So let's say that the account is at a 10,300. Do I risk 1% of the 10,300 in the next trade or 1% of the original account of 10,000? I do the original percentage of the account of 10,000 for this type of standard risk management. Now, when we get into the bit more aggressive, that's when things start to change. But for this, yes, you just risk 1% of the 10K. So you would risk $100, not $103. Aaron, I hope that answers your question. So I guess this is the same thing right here. Alex, if I have 10,000 in the account and I win one trade using 1%, making 10,200, would my next trade be 1% on the 10,200 or on the 10,000? Again, same thing for this strategy, for this basic standard strategy. You want to risk the 1% on the account deposits or the start of the account, not on how much is in the account. You always risk a percentage amounts of a certain amount of money because if you catch a few good trades, your account will probably grow 2% more and will be higher than the beginning. Same type of question. I mean, I don't know how the fuck to answer this, dude. G, whenever I'm about to enter a trade, I get scared. Can you please suggest something? Yeah, dude, don't get scared. I don't know, bro. I don't know. Like, I don't know, dude. You can't trade. You gotta be ready to, I don't know. I don't fucking know, dude. I don't know. Like, I could rant about something, but USD CAD isn't playing out. Dude, what the fuck are you talking about, bro? The trade, like, it's still in the same spot, dude. It's just doing its thing. Oh, dude, I am not. Like, it's gonna take a while for you guys to get into the community, bro, because I could already see that shit being crazy. Do you trade flat 2% based on the account balance, no matter what's the dollar amount? Yes, on the account balance, on the deposit balance. What about the 100 to the million risk management? I mean, I've said that a bunch of times. You could just go look at the YouTube videos. Should we follow this risk percentage on funded accounts also? This is actually intended to be executed on challenges. How many trades should we take max per week? 1 to 2 max. Do you hold trades over the weekend? Lately, I have not been, and there's nothing against it. I just haven't found opportunities to do so. Very rarely do I hold over the weekend now because the move that I have been able to execute and the type of money that I'm risking, I just rather not. I definitely could. I just personally rather not. And I might lose out on money on that, and I'm totally fine with that. Again, that's the beautiful of this. I know exactly what I'm doing. Update on the pairs for the week. Oliver, you're probably late, man. You probably just woke up. Guys probably still laying in bed, huh? Is this risk management for a personal account or for a prop firm? It applies for both. Like I did a $10,000 account, for example, because it's something that the quality of the people that are in here, I would assume, could have a $10,000 account. And you can also use this on a prop firm account as well. So I use the personal example on the 10K. Yes, this is the only reason I'm able to stay afloat after 2.5 years. It's the 1 to 3 risk to reward. It's a cheat code now. Look, this is Dimitri. Shout out to Dimitri. Like what Dimitri said. Yes, this is the only reason I'm able to stay afloat after 2.5 years is the 1 to 3 risk to reward. It's a cheat code. Now I have a profitable strategy. Let's fucking go. I'm gonna make you proud, G. I believe in you, brother. Trust me, this right here is the hack. This right here is the fucking matrix. Like this is like the risk to reward is the shit, bro. I'm telling you. You have a profitable risk to reward and you are good. I can't stress it enough. I really can't stress it enough. Is your 100K trades 1%? No, it is not. Hey Alex, I see that you take one good trade in a week and I'm trying to do the same, but do you believe in the valuation challenge? I must find 2 trades in a week to pass with a 50% win rate. Yep. It'll take you a month to pass. It's very average, brother. Would you be able to write down the trading plan the way you say it? Yep. Coming soon. We're still not even done. Would you readjust your risk amount it is per month? I think I already said that. Trey, yeah, that's funny. How do you incorporate leverage into your strategy with the 10K, for example? You could just risk more than 1 to 2%. That's how the only way I would incorporate leverage if I want to risk more than that. Okay, let me see something like this. At the beginning of the year, you said that 2% is, you said 2% risk. It is a good month to keep up the second month, 2% also good. Then the next month, 2%. Would you reduce the risk? Is there any rules also with 1%, like a red flag if you lost 10 trades in a row, for example? First of all, losing 10 trades in a row is very fucking difficult. I don't remember the last, like I think the most I've lost in a row is like 6, like very recently. Probably was like a whole month losing trades. It's very hard to lose 10 trades in a row. If you do, you're probably over trading. And yes, the months that you go from 2% to then 1% are not the great months. And I already talked about that. If you're late, gotta just watch it on the recording. What's your highest risk to reward? Cool question. It's on USD JPY or AUD JPY. I think it was a 1 to 14 a long ass time ago. Yeah, I feel like it has to be USD JPY. If I can't find it, we'll just disregard it. Yeah, I forgot what pair it was, but I know it was a JPY pair. I think it was maybe Euro JPY. I don't know, or CAD JPY. I just checked this last time. Yeah, it was like a 1 to 14. Oh yeah, whatever. Can't find it. Yeah, it was basically like a 1 to 14. How do you change the percentage? Well, you change the percentage here. When you go risk your trade, you can decide to how much do you want to risk? Do you want to risk 1% or do you want to risk 2%? That is how you change your percentage. Can you explain how you lose a funded account? Nope. You can go ask them how you can lose it. Yes, Matt. Hey, Alex, for personal accounts at let's say 10K, do I know when to stop risking 1% on that 10K value? Yeah, you should know. You're gonna feel comfortable with it. Can we? I'm reading some of these questions. They are just more like curious questions, you know. Can you show us how you put a 1 to 3 on LQH? You don't put a 1 to 3 on LQH, you put a 1 to 3 on the charts, like right here. And then after you put that 1 to 3, then you go plug in the numbers. It's just very easy. This trade never had to shift the structure. This trade never had to shift the structure. Not having a rejection. This trade is on the way. This trade's on the way. This trade is here. Cool. Now we're at the area of interest. Thanks. Now this is the higher low that we're going to wait for the shift. So the shift to the higher low. And this is the new 30-minute higher low as well. Yes, 30-minute higher low. So now this is what we're going to wait for the shift to structure. You guys see the importance of waiting for the shift to structure. Just because the trade is at the area of interest or we're close to it, it does not mean that we can execute the trade. We have to wait for the shift of structure. I'm so glad that we're doing this live and that the market's actually moving greatly. Cool. So yeah, guys, that is pretty much everything for today. Um, I have more stuff to talk about, but we will do that in tomorrow's class. So what do you guys think? I mean, risk management is very easy. I told you guys everything from this point is just piecing shit together and just kind of adding things. Things are very, very, very easy. Quote of the day, quote of the day, quote of the day. Mm. Quote of the day is risk to reward is the secret. Risk to the reward is the secret. Anything above a 1 to 2 is perfect. A 1 to 2.5, a 1 to 2.2, a 1 to 2.69. You do whatever you want. So after the boot camp is done, we will let you guys know if you want to have your own credits into your account or a challenge. So be patient, guys. We still have plenty of time. And I will see you guys tomorrow, 4 p.m. EST. Thank you guys very much. See you guys then. And set and fucking forget.